Hi, everyone. Welcome to latest webinar from Silverhill Funding. So excited you could make it here. My name is Zach North. I'm the marketing director at Silverhill, and I'm joined by our national head of sales, Juan Barcelo. We're really excited to share this presentation with you, and we know your time is valuable, so we're only going to take up about 30 minutes. So we'll get right to it in a second. Before I hand it off to Juan, I just want to let you know that you can feel free to post questions throughout this webinar. We save all those. One of our regional managers will reach out to you following the presentation with an answer. So the questions can get as specific as you want. We'd love to help you there. Maybe you want to learn more about a specific program. Maybe you have a deal to discuss. We're happy to help there. The last thing I'll say is that this webinar is being recorded, and we will email it to you tomorrow. So feel free to take notes, but we will send you a video link as soon as possible. So with that, Juan, please take it away.
Zach, thanks a lot. Appreciate it. And we appreciate everyone who made it today. Really, I know you guys are busy, and we just want to share a little bit of our world at Silverhill Funding with you. So we do appreciate your time. So let's get started. So, here we're going to talk about how to boost your bottom line, right? Giving you options in the commercial real estate finance side, especially in the small cap side, to allow you to make some money, right, as a broker. So that's me on the left there, and that is Zach, who you just heard from, and that is our information. We'll post this information again at the end. In case you guys have any follow-up questions, you can always email or call us as you will, okay? So let's get started. So bottom line, we're gonna discuss all these points here, these 5 points. What kind of lender are we? Why do brokers and borrowers work with us? What are the top solutions that we have available for you today and your borrowers? How can you know whether a deal fits or not? So understanding how to size up a deal. And finally, quickest way to get started. So we'll cover these 5 main points today throughout the presentation. And again, as you come up with questions, please make sure to submit them, and we will get them answered after the webinar. So what kind of lender are we? Let's talk a little bit about our past and what we're doing now. We really like to be the small business, small balance experts, if you will. So we've been doing this since back in 2003. We were one of the first companies who dedicated to this small balance commercial space. And what we call small balance is $100,000 to $2 million in loan amounts. And we do that over a wide range of commercial property. Okay, so we've been doing it for a while. We like to be known as experts ourselves. We have a good team that has been with us. Actually, most of our leadership team has been with us since '03. So we all know how to work well with each other, and we all understand the small balance space very well. We are a company that's owned by Bayview Asset Management. So we're part of the Bayview family. Bayview is an asset manager, basically with $16 billion in assets under management across several different industries, if you will, mostly focused in the mortgage industry, but also on consumer credit and asset-backed securities and mortgage servicing rights. So, Bayview's been around since 1993 and basically has worked throughout that time in diversifying, our business lines. Okay, so we are part of the Bayview family as well. We are the small balance commercial origination division for Bayview. And I always like to talk about, and Zach and I obviously always talk about it, is the fact that positioning our product and positioning ourselves with brokers is very important to us. So we always like to say we are between banks and hard private money. Okay, so our terms are similar to the banks, although we offer terms that the banks don't offer, and our rates are a lot lower than hard and private money. So we're a lot closer to bank type financing than we are to hard and private money, but we do have a lot of the flexibility that the banks don't offer. Okay, so that's kind of where we position. And if you've seen deals, customers bring you deals, a lot of the times it's, hey, the bank can't help me, but maybe I don't want a 10 or 12% rate and pay 5 points. So what's the solution? Up until Silver Hill came out in '03, there were really no solutions, and even after the market crash in '08, the solutions went away. I mean, Silver Hill stopped originating for a long time as well. So, we've been back since 2016, and we've carved a real good space again in between banks and hard private money. So, competitive rates, non-bank solutions, cash outs, 30-year fixed, two things that you really don't hear banks do. We also have, alternative documentation products, which we're going to get into. But basically, we offer alternative financing solutions for both small business owners and investors in the commercial real estate space. Okay. So, poll question. I know Zach has prepared some questions. So, Zach, take it away.
Hey everyone, it's Zach again. I'm going to launch the first poll questions and give everyone a few moments to answer. Here we go. Question 1, have you closed a small balance commercial loan within the past 6 months? It's always very helpful for us to know who we're talking to, and that's going to color the presentation a bit. Are we talking to people who are actively doing this type of business? Maybe some of you have in the past, but you haven't recently. Maybe you have done a lot of residential business, but rates creeping up. Maybe you're thinking about getting back into the commercial space. We know everyone's coming at this from a different angle, so we're just interested to know who we're talking to. I'm going to give everyone a few more seconds to answer here. Okay, Juan, I think we're about good here. It's a great mix. We have about 57% say yes. So it's close to half and half. So some experienced brokers, some brokers who are doing this kind of business right now, and some who aren't, maybe learning or maybe about to make a switch. So I'll close this up and give it back to you, Juan.
That's good. I'm hoping that of the 57%, some of you guys have already talked to us, done some business with us. But if not, that's why you're here today. So hopefully we can get you to start transacting with us. So why do brokers and borrowers choose us? Okay. The biggest reason why we get loans is, borrowers that have been to their bank, their business bank, where they have their accounts and all that stuff, and they get turned away. The reality is that in this small cap space, loans under 2 million and really loans under $1 million is mostly what we see. Banks really, they're not interested in financing these types of loans. They want to do commercial property that's $1 million plus. They want to do construction of commercial properties. They want to do some of these other things where, the small business owner or maybe the small investor just isn't a fit for them. Okay, so that's the number one reason why people come to us. Number two is, the tax return issue. A lot of times people want to make an investment in a commercial property or even refinance an existing commercial property, but they just don't want to deal with their tax returns. Maybe their tax returns don't show income because they are leveraging, our tax laws. And so, when you go do a loan at a bank, obviously, your tax returns have to look extremely clean. And it has to be a business that's stable for the last 24 months in order for them to do a loan. So that's number two reason. We do have, we do offer full doc programs where we have our lowest rate, but we also do our light doc programs and our bank statement programs for small business owners. And so that provides that flexibility that I was talking to you guys about earlier, where, we're able to do certain things that the banks cannot do. Okay, cash out. About 50% of our pipeline is cash out. People taking equity out of their existing property. We get a lot of people that are cashing out to buy another investment property. We also get a lot of people cashing out that are reinvesting that money in their small business, whether it's inventory or payroll or working capital or equipment. They're using a refinance and a cash out for that purpose. SBA fallout. A lot of these small business owners, they come to us because they wanted to get a 90% LTV from SBA, but for one reason or another, whether it's documentation, whether it's eligibility, or simply just the process takes too long, folks will come to us and take advantage of especially our business bank statement program, which is very popular with the owner-occupied and SBA fallout group. Number 5, this can be a mix of all of them, but the reality is a lot of the loans that we do are folks coming off of a hard money or private loan where they're paying excess of 8, 9, 10% in their interest rate, or they're looking at a maturity. Those loans tend to be 12 to 24 months, and they're just coming off of that and really repositioning their debt into a more stable, lower cost option. And finally, again, the bridge loan, right? It's kind of mixed in with number 5, folks that just need to come off of a bridge loan because it is short term. Okay, so really those are the top reasons why borrowers come to us, brokers come to us, and really it's brokers. 100% of our business is the broker business. We're a wholesale lender, and brokers brokers are our customers. So as borrowers are looking for these options as an alternative to the banks, they'll go to brokers, you guys, and potentially you guys can do business with us. Okay, so here we put up, some good testimonies from some of our top brokers, and these are folks that I know personally and that we've been doing work with over the last several years. But the reality is, we have the experience. We can do a full suite of different options from full doc to light doc. We can do single family rentals with very little documentation on those. And finally, brokers can make up to 4 points with us. 2 points in the front, 2 points in yield spread. The yield spread gets paid directly to brokers. We don't have to put them on the closing statement. And finally, one of the best things that brokers like about us, and when I'm talking to new brokers always, and I mention that because the first question is, how much do you guys charge? And I tell them we charge no points. We have closing fees, but we don't charge any points on top of that, which is not common in the small balance commercial space. Most lenders will charge a point or two and have closing costs on top of that. So we only charge the closing fees. It's usually $2,000 for an underwriting fee and $1,500 for a legal doc prep fee. But that's it. There's no points on top of that. So very different than what folks are used to out there in the small balance market. So as I mentioned earlier on, we've been together for about 17 years, and I'm talking about the leadership, and even some of our salespeople have been with us that long. We call ourselves experts because we've done it that long. We've been through the market crash and back, so we've seen the cycles. We understand the business, and we know that if a deal fits, and it's a good borrower, strong borrower, we're gonna make the deal happen. We're going to apply common sense underwriting. We're really going to look at a deal and say, okay, is this the kind of borrower that we want to work with? Obviously we service these loans for the long term. So we want to make sure that the borrowers are strong borrowers. But if a deal makes sense, we've seen pretty much more deals than most lenders out there in this space specifically. So we can make a real good decision based on our data and based on our history. So what are the solutions available today? As I mentioned earlier, we do have a commercial full doc program where we will collect tax returns. That usually offers the lowest rates. We are writing loans in the high 4s and low 5s these days on a full doc loan, a commercial. But we also have light doc program for investor, and the light doc basically is we don't collect tax returns. We're going to look at the property cash flow through the rent roll, the operating statements, and then verify it with the appraisal. For owner occupied, we do have another light doc option, which we call a bank statement program. And what we're going to do there is we're not going to take a small business owner's tax returns. We're going to take their business bank account and really look at total deposits versus total expenses and underwrite the loan based on the business bank statements. Okay, so no tax returns. Finally, our SFR rental program, which is in the small balance commercial space, a very popular and competitive product. We only require an application and a credit report. Okay, we underwrite based on market rents, and that market rents is delivered to us by the appraisal. So, the SFR rental program is something that today makes up about 10% of our business. We do want to grow that, and we're actually working on coming up with even more competitive rates for it. So we're real excited about the future of our SFR rental program. This is an example of what our rates look like. As you guys know, these move around sometimes. We don't change them weekly or monthly. We change them based on, what's happening in the markets. As everyone knows right now, the indexes are all moving north. And so, we probably make some adjustments to our rates, but we really focus on LTV, as you can see on the top, and credit score. Those are the two main drivers of our rates. And if you really look into it, we really make the rates competitive when we get above 725 credit. That's where we really are very competitive. Okay, so tier 1 properties are usually our multifamily, mixed-use residential, and SFR rental, and our tier 2 properties are all the other commercial properties, office, retail, warehouse, self-storage, and automotive. Finally, at the bottom, some of the options. Again, 100,000 to 2 million. We will take a look at loans over 2 million on a case by case, but we don't do anything below 100,000. Our average loan size is really around 500, 600,000. That's really what we see the most of. Of course, we're going to do purchase, cash out, and rate and term refi. As I mentioned before, about 50% of our pipeline is cash outs, a 30% purchase, and the rest are rate and terms. We offer only 2 rate products because we've seen that, that's really what's popular. We were the first ones to come out in 2018 with a 30-year fixed product for commercial property. That had never been seen. And real quickly, it became our most popular product, and to this day, it still is. So it's about 40% of our pipeline is 30-year fixed. Of our SFR rental program, folks like to do a 30-year fixed there as well. So, but we do offer a 5/1 ARM, at a slightly lower rate. But the reality is that most people these days, they want to lock in that low rate, for the length of the term. Okay, max LTVs. We're doing 75% LTV for everything. We had a break there that we've changed, so we're now 75% for everything. 70% is only some properties and some credit scores that we limit to 70%, but for the most part, 75 is our max. We are working on an 80% purchase product for the SFR rentals, so that's soon to come out. And then our rate floor is 4 3/4. Most of the time we're writing loans for that high credit score, low LTV. If you look at the rate grid at the top, in the high 4s and low 5s. So we talked about eligible property types before. Our tier 1 is our best price, multifamily, SFR 2 to 4, and mixed use, primarily residential. And then finally, tier 2. These are our property types that we do tier 2. We took out restaurants and daycares, obviously for obvious reasons during the pandemic. We hope that as things get more back to normal, that we can start lending on restaurant, bars, and daycare centers. But for now, these are our eligible property types. We do a fair amount of mixed-use commercial, retail, office, and warehouse. We also do some automotive. We don't see a lot of self-storage and mobile home parks, but we can finance them. So this is our commercial program at a glance. Really, some of the stuff we've been talking about. Our minimum FICO is 650, although pricing gets much, much better over 725. And you see our minimum debt service coverage ratios there. That's important to take note of when we're underwriting files. Prepayment fees, standard is 5 years, 5%, or 5 years, or I'm sorry, 5% for 3 years, or we have a declining 5, 4, 3, 2, 1 option as well. Our most popular is our 5% for 5 years, because most of the time people are doing a 30-year fix, so they figure they'll take a lower rate for that longer prepayment period, especially if they're going to stay in the loan for at least 5 years or longer. Okay. Fees, we talked about fees a little earlier, what we charge and broker comp. Most of our brokers are making 3 to 4 points these days. Recently I mentioned we've had some improvements, 75% for purchases really across the board, 75 LTV. We have a flat underwriting fee of $2,000 for our SFR rental program, where we only charge $2,000 and nothing else. We don't charge for due diligence reports or credit reports or anything else. We added about 2 weeks ago our Light Doc Investor, and about 3 weeks ago our bank statement. And we've just seen our pipeline completely blow up in March. We've had like record weeks for the last 3 or 4 weeks. So a lot of brokers are taking advantage of these these updates, these program improvements, which we came out with now, but they existed before the pandemic. So it was one of those things where during the pandemic we suspended lending. We came back out in October very conservative, and now we've kind of loosened things up as we see the macro forces really improving. So again, our pipeline's really blown up in the last 2 to 3 weeks due to these program enhancements. I mentioned the SFR is that this is pretty much one of the most competitive products out there, and we're working on lowering rate more on this product because we do want it to be a bigger part of our total production. Up until the end of this month, and we did it last month for our SFR rental, that is 4 units, or your duplex, triplex, fourplex, that is used as an investment property only, nothing owner occupied, obviously. We are offering a free appraisal, and a lot of people, this promotion's helped us grow that pipeline. So people are taking advantage of it. Okay, so it's a savings of $500 to $700 depending on where the property is and what type of property it is, but a lot of people are jumping all over it. So limited time, obviously. We'll have other promotions throughout the year, but the free appraisal is probably going to go away here at the end of March, and I don't know that we'll do it again this year. So take advantage of it. You're saving your borrower $500 to $700. So again, we want to reiterate, Zach, I think we boast a little bit about being the experts, right? But there's nothing wrong with it when it's true, right? We've been doing it longer than most in the small balance space, and so we can go out and say, hey, we're the true small balance experts. We can deliver on common sense approach. We have certainty of execution. When brokers bring loans to us, they're going to close. So long as obviously everything falls into place, eligibility is right, documentation is right, and everything else. I'm not going to tell you we close 100% of the loans we see, because nobody in the country can say that, right? But as far as a higher volume, small balance commercial lender, certainty of execution is always there for us. And so brokers, when you talk about why they come to us, certainty of execution is one of the big reasons, on top of the fact that we've been doing it for longer than most. So how do you know if a deal fits or not? Well, let's take a look at some of the deals we've closed recently. Okay, and as Zach mentioned, I think over 50% of you guys have closed similar loans in the last year. So like let's take a look at some of them. First one's in California, light industrial refinance, 75 LTV on a 5-year arm, broker comp. Okay, obviously that's on the smaller side. Here's another bigger one in Ohio, multifamily purchase, 70% LTV, another 5-1 arm. Broker made $25,000, very good payday. Commercial condo, we can do condos. They must be owner-occupied condos. We can't do investment condos, but we can do owner-occupied commercial condos at 75 LTV on a purchase on a 30-year fix. I've seen a lot of these commercial condos. A lot of the times they're doctors, lawyers, dentists, basically professional small business owners. But we've done here in Miami where we live, office condos right on in Coral Gables for a hair salon, real nice high-end hair salon. So we've done commercial condos in the past, and we still do them. And as long as they're owner-occupied, we will do a loan. So these are, example of some of the stuff that we've closed recently. Okay, why they fit? The borrower is able to provide consistent, stable, and verifiable income. Credit history. There's no BKs, no foreclosures. The credit score is where it needs to be. The LTV is within range of what we offer. Reserves. We do require 6 months of reserves in liquid assets. We'll use bank accounts, 401k accounts, stock and bond accounts, any other type of liquid asset that can be verified to verify that 6 months of P&I. And finally, property condition. We don't do property that is non-stabilized, whether it be lower occupancy, or I should say high vacancy, or property condition. If the property needs rehab or fixing internally, externally, it's not going to be a property that we're going to finance. So we want to finance stabilized, property where everything's, as they say, rent ready, okay, or ready to occupy. All right, Zach, another poll question.
Yes. Hey, Juan, let me launch it right now. So Juan just explained some of the loans we've closed very recently. So we're curious, are you seeing these types of scenarios? Maybe you've seen them, didn't really have a place to put them, maybe you are closing them, or maybe you just like to. You're seeing the opportunity, you want to do something about it. So I see quite a few responses already. We'll just give a few more minutes. And Juan, the response is overwhelming. We have nearly 85% saying yes, they are seeing these scenarios today. So that's very good news.
Perfect.
I'm going to close it right now. Thank you.
Well, the only thing I'll ask Zach is if folks are seeing the scenarios, like we want to see them too. So give us a call, reach out to your rep, and let's do some business together. That's the idea. All right, let's move on. We did talk about like what we can do, but I want to talk about a little bit, 5 reasons why deals fall out. Maybe they're too rural. We do like to make sure that county population is over 200,000 for commercial and over 100,000 for tier 1 residential. We don't go outside of that. We want to stick to the more urban and suburban areas. Ineligible property types, they came to us with something we can't do. And on the right here, you see in that box some of the things we cannot do. One of the things that's not on there that we get a lot of these days, especially, is properties with cannabis tenants or being used for some kind of shop, retail, doctor, whatever having to do with the cannabis industry. Because the laws haven't changed yet on a federal level, we cannot lend on those properties. But this is an example of some of the properties that we cannot finance. The third biggest reason, credit guidelines. People don't have the right credit history, they don't have the right credit score, or they don't have enough liquid assets for reserves. So these are the top 3 reasons, but there's a lot more that we see as far as why things don't close. One of the biggest ones is title issues with the business entity that they have that owns the property. Those come up later on in the process all the time, and it's frustrating because we work hard to get them closed, and sometimes these things come up and they're just outside of our realm. Okay, So we talked about the light doc investor solution. Okay, no tax returns required, and we focus on what the appraisal sends back to us in the property cash flow, and then the bank statement deal, which is great for small business owners. So those small business owners, they own a shop, some kind of a retail off, some kind of an office. They can't get a loan at the bank. They can't get a loan through SBA. The bank statement option is really something that they're interested in. And again, these two here are the two recent updates that we did. And I mean, our pipeline's just blown up. So a lot of people really like these two solutions. And again, we continue to expand. Look, the good thing about having our experience and our knowledge is that we're constantly looking at new things or new products to come out with. So we just came out with these two, and that's basically taking us back to where we were pre-pandemic. But we are planning on several different program types or program offerings, if you will, features that are going to, expand our product lines and our production. So we are always working and looking at opportunities, okay, to expand the product. So that's something that we're always doing. Some people don't like these quick changes that we make, but the ability for us to make these quick changes and really adapt to the market is something that's part of why we consider ourselves the experts, right? Why we have the knowledge. So we can change fast. We can adopt new product types real quickly because we have the data and we have the expertise. So quickest way to get started, I like to put the map up so you could see where our people kind of work out of and who's there. So again, some of you may already be in touch with some of these reps, but we basically have folks that work the different regions of the country. And again, we're focused 100% on the broker community. That's who we work with. Those are our customers. So we want you guys to show us some of the deals that you guys have been seeing recently. So you can go to our website, contact us, and all these folks' information is on there, or you can contact myself or Zach, and we will get you to your rep right away. One thing I do want to bring attention to is at the bottom are the states that we don't lend in. Some of these states have licensing rules. Other states we just have never seen enough business in, so we tend to stay away from, okay? Latest rate sheet, you can access a rate sheet or get a rate sheet sent to you by one of our call center folks. If you just go in and fill out a form on our website, they will send you our latest rate sheet. This is what it looks like here. And again, we don't change rates weekly or daily. We just change them based on market factors. If indexes are moving around, then we'll change rates. But for the most part, our rates are pretty stable. One of the things that brokers really like about us is the work that Zach and his team do. We do a lot of customized marketing materials for our brokers, and there's a marketing toolkit that you can access, or if you're interested, you can reach out through your rep and ask them about these materials, and usually they'll get you set up with one of Zach's folks that do an excellent job, guys. Like, if you guys like all the emails we send you and all that, that's all Zach's team. They do a great job with marketing, and they could do that for you. They could design a flyer that you can email your contacts, all right, or that you can post on your LinkedIn page or what have you. So reach out through your rep, and we'll get one of our folks working on those right away. Zach, did you want to say anything on this?
Yeah, we want to help. We know how tough it is to make these kind of materials. It's time and money, and we always like using them, but no one ever likes making them because it's hard. And so we want to help you with that. We know that you want to focus on making your calls, growing your business the way you want. Silver Hill can make that easier for you as far as marketing goes. You can see here that, all right, flyers are there, these kind of product sheets are there, but also social posts and graphics. You know how much everyone here likes to use LinkedIn. And an image can go a lot further than just some text. And so we want to provide graphics to help you get your name out there and meet new people through social networks, not just flyers and product sheets.
Absolutely. Totally agree. Okay, so what we need to issue an LOI, since you guys are seeing deals and stuff, we want to see them. So, here what we've done is we've put up, what we basically need, to issue an LOI. I would always suggest talking to a rep because many times they can issue an LOI if you don't have all of these items. So there's opportunity to even issue LOIs with less than these. But again, this is what we require on the front end to issue an LOI. And basically the idea is we want to know credit, we want to see an application, and we want to understand how we're going to underwrite the loan. So property income and business income is important. And by the way, we do use DocuSign for everything. So we can send you a DocuSign application that you can forward to your borrower. Being remote these days, as we are as well, DocuSign and e-signing has become the norm. So we definitely can accommodate that. All right, so Zach, we've reached the end of the presentation. I think we did a great job today. Our information is right on here, guys. Again, as Zach mentioned, he will be emailing everyone that attended the presentation. But if you want to take out our name and email down, and reach out to us, we can get you in touch with one of our reps so that you can get started issuing LOIs with Silver Hill, and most importantly, start closing loans and make money with Silver Hill.
Yeah, thanks everyone. And thanks, Juan, for taking the time. I really appreciate it. Everyone in attendance today, it means so much that you're able to spend the time with us. We really value that. And we want to keep the conversation going. So we'll reach out, like Juan said, and please do connect with someone at Silver Hill. We'd love to hear from you, and we'd love to work from you too. So Juan, thanks again. Everyone have a great rest of your day, and we'll be in touch. Goodbye, everyone.
Thanks, everyone. Take care.